Okay, anthem and the ICAN anthem. So I'm going to play
Can I take over?
Intel Evo laptops. Seamlessly connect your laptop to any phone.
Let's go, I can found of treasure in triumph of an race, standing strong.
the initial glitch. I think I suffered some minor network issues that made you lose me for some minutes. District chairman to give us a remark, open address. Back to you.
Okay, thank you very much. Our participants and the speakers for today, I want to welcome every one of you to this webinar. As usual, we have our monthly webinars. This is our February webinar. And as we have been rightly told, it deals with the contemporary issues in accounting
Chairman,
and audit.
you have something in your background.
Nothing.
Okay.
Nothing, please.
There is okay, go on.
Okay, so I'm welcoming everyone to today's webinar, and my belief is that we are here for a purpose, and at the end of the webinar, we would have benefited much more than what we have known before, or probably know new things and know better than what we knew before on the topic. And so I encourage everyone to listen attentively and also to participate in the interactive session. Get your questions ready so that we'll make it a very impactful session. And at the end, everyone must benefit from it. I know your time will not be wasted, and I believe that you are prepared for it with your pen and papers ready to jot, or probably your pads where you can put down certain things. So we hope to have a very successful and engaging session. So welcome once again, and thank you for joining the call. Thank you very much. Over to you, please.
Okay, thank you, Madam Chairman, for that introductory session. Once again, while Juliet Guavon prepared to get her presentations ready for us, I'm going to read a bit of her profile just to get her ready. Mrs. Juliet, you can get your preparation ready and start sharing the screen. She's going to deliver a paper on IS and equipment, common errors, misconceptions, and mistakes. As we mentioned, the theme of this audit of this webinar is contemporary issues in accounting and audit. And I'm sure majority of us who are on this call, in the course of our either accounting or audit experience, will probably have issues relating to the assessment relating to fixed assets, property, plants, and equipment, which relates to the fixed assets disclosures. So she's going to talk to us on common errors, misconception, and mistakes to ensure we don't, run into that sort of a problem. Guavon is an accountant with over 2 decades experience. She's an associate member of the Professional Institute of Chartered Accountants of Nigeria. She's equally a specialist on IFRS and international public sector accounting. She's trained as an auditor with Nexa Buabel & Co., which is a firm of Nexa International worldwide. She's equally is the Chief Internal Control Officer at Africa Resource Center for Excellence in Supply Chain Management. Highly skillful in the human technology requirements of conversion to the ongoing adoption of the IFRS and the IPSA standard. She was a project coordinator and senior project manager with conversion to IPSAS with the Kaduna State government in 2017. And she championed the first time adoption of Accra-based IPSAS accounting with 23 local government with the Kaduna State government. She's a consultant in public finance management for Kaduna and Akwa Ibom states, and currently provides service for a robust portfolio of private companies across industries. So we are coming up with a sort of a combo of someone with vast experience in both private and public sector. So at least we know how the assessments or the mistakes that happened within the 2 different accounting concepts, and how we can navigate such areas. So over to you, Mrs. Guavon. You have 40 minutes to close this session.
Okay. Thank you very much, Mr. Michael. Thank you, Amuwo, Duffy, and District Society for having me. I'm very excited to be here. I hope you are as excited as I am, and I believe we're going to have fun through the next 40 minutes. I'm here to discuss IS 16, Property, Plant, and Equipment, and we're going to look at some common errors, misconceptions, and mistakes. I recognize that IS 16 is by no means a new phenomenon. It's a standard that often seen as the most easy to understand. It's usually seen as the most relatable among accountants. IS 16 has been with us for a long time. Specifically, IS 16 Property, Plant, and Equipment replaced IS 16 Accounting for Property, Plant, and Equipment in March 1982. And IS 16, the then IS 16 Accounting for Property, Plant, and Equipment also replaced part of part of depreciation accounting. Then it was called IS 4, then depreciation accounting in November 1975. So you agree with me that it's been a long journey with IS 16, and it has gone through series of amendments since then, the most recent of which was in May 2020. So today I want to take us through some of those common errors. My experience in practice has shown that many accounting practitioners often misconstrue, omit, completely gloss over certain provisions of IS 16. So before we go into this, I would like to appeal that we keep the chat room as active as possible. I hope I can see the chat while I'm sharing my screen.
Yeah, you should be able to. And you are now a co-host, so at least we won't be having distractions from
Excellent. Excellent. So let's keep the chat room as interactive as possible. So if you have, if any aspect of what I'm about to say resonates with you, you can just amplify that or contribute to that through the chat box so that I can know you're hearing me and I'm not speaking to myself. Thank you. So first we'll be looking at some unique PPE classes. There are some classes of PPE that are not like our regular day-to-day plant and machinery, furniture and fittings, equipment, and so on and so forth. So we're going to look at some of those unique PPE classes and how IS 16 describes it and how it should be represented on our financial statements. Okay. So IS 16 paragraph 14 specifically presents a situation where an item of property, plant, and equipment goes through regular inspections for faults. Where an item of PPE goes through regular inspections for fault. IS 16 specifically mentions aircraft as an example. And it says where such regular overhauls are carried out, an entity is expected to recognize such regular overhauls as part of the carrying amount of their property, plant, and equipment. So what this is saying is where regular overhauls are carried out, or provided it's a condition for continuing operation, and provided it meets the recognition criteria of paragraph 7 of IS 16, which provides that the cost must be reliably measured, and it is probable that future economic benefits associated with the use of such an asset will yield to the entity. So if these three conditions are met, one, the cost can be reliably measured, two, that the future economic benefits associated with the use of such an asset will flow to the entity, not any other entity. Where that is established and such overhauls are a condition for continuing operation. If you're familiar with the aviation industry, you realize that aircrafts are often required to go through certain checks, overhauls, after a particular number of flown hours. And such overhauls are often a condition for continuing operation. You cannot fly that aircraft without, fulfilling that particular requirement. So what paragraph 14 is saying is where such overhauls are carried out, irrespective of whether parts are replaced or not. So it could indeed just be labor costs. Are we together? it could just be labor cost. And for the first time, the big picture, the big story here is that for the first time, property, plant, and equipment now goes beyond items you can feel or touch. Are we together? Items you can feel or touch. So it now goes even further into saying labor costs can qualify as item of property, plant, and equipment, provided that they meet those three conditions. Please write them down. One, that the cost can be reliably measured. Two, that it is probable that future economic benefits associated with the use of such an asset will flow to the entity. And thirdly, it must be a condition of continuing operation. So one other aspect I would like us to go back and research on is if this applies to other industries like the shipping industry, if there are other regulations within the shipping industry that provides that entities must ensure that shipping industries, the owners of ships, ensure that their regular of such overhauls are carried out before they are able to operate. I'm not sure. So we can research that after now. But the IS 16 paragraph 14 specifically mentioned aircraft, and that's why we are zooming into aircraft at this time. So we must remember that labor costs associated with such regular overhauls can qualify as addition to property, plant, and equipment. And what this goes to show is that going forward, where you see the financial statement of a typical aviation company, you can look out for those provisions, and you see how they are treated in the fixed asset schedule. So let's look at a typical, we'll be looking at a typical fixed asset schedule for a particular aviation company shortly. But before then, paragraph 14 also provides that where there are subsequent overhauls, the new overhaul, the carrying amount of the previous overhaul must be recognized. I need to move this out a bit. So for subsequent overhauls, the carrying amount of the previous overhaul must first be recognized before you recognize the carrying amount of the new overhaul. And paragraph 14 also took into cognizance the fact that it could be possible that the cost of the previous overhaul may not be readily determined in terms of standalone. For example, if the previous overhaul involved 4 compartments of an aircraft, for example, and then the new overhaul is involving only 1 compartment, and the cost was lumped up initially in the previous overhaul, IS 16 paragraph 14 is saying the cost of the future similar inspection may be used as an indication of what the cost was when the previous overhaul was carried out. So what this is saying is where the carrying amount of the old overhaul cannot be separately identified, the future cost of such similar inspections can be used as an indication of what the cost of this existing inspection be. So we must recognize that. So far, we've talked about the condition for recognizing such overhaul. And we also emphasize that such overhauls may indeed just be labor costs, So irrespective of whether physical parts were replaced or not, such labor costs will form part of the carrying amount of property, plant, and equipment. And don't forget also that the carrying amount of the previous overhaul must first be recognized before recognizing the current cost of the new overhaul. Okay, so let's look at a typical PPE note for a Nigerian airline. For this particular airline, can you still see my screen? If you can see my screen, please say something in the chat box. You can still hear me clearly, say something in the chat box, please. Okay, so thank you, Mr. Samuel. Thank you, Joy. Thank you. Okay, so like as you can see, this is the annual report and financial statement of an airline an airline company in Nigeria, actually. So you can see aircrafts, we can see building. These are the various classes. This is what we call classes of property, plant, and equipment. You can see aircraft, building, plants and machinery, and so on and so forth. The last column here, if you can see, we have aircraft and engine overhaul. Aircraft and engine overhaul events. So you can see addition for 2021 was 610 million. Depreciation, if you come down, you see depreciation of 16 million. And then the carrying amount is 594 million. What this means is if by 2022, an overhaul is to happen for in the same part or in the same compartment as that of 2021, this 594 million will first of all be recognized. Will be recognized before recognizing the new cost. So this is the carrying amount, 594. We recognize before recognizing the new. So this is what we should look out for when next we come across the financial statement of typical airline company. We should ordinarily see this as a standalone to show how it has recognized overhauls over the years and the carrying amount of such overhaul. Emmanuel Bello, thank you for joining us. Thank you. Okay, so if we are good up to this point, please say hi, say something in the chat box so that we can continue. If this is clear. Thank you, thank you, thank you, thank you. Olabi, thank you. Okay, okay. So so we must also recognize that and not forget that such overhauls must not necessarily include the replacement of physical parts. Thank you, Kristen. Thank you, Neka, Edith. Thank you. Okay. Okay, next we'll be looking at bearer plants. Bearer plants. So in June 2014, the scope of IS 16 was expanded to include bearer plants. This is actually related to agricultural activities. So bearer plants, according to IS 16 paragraph 2, no, paragraph 6 actually, it says a bearer plant is a living plant that is used in the production or supply of agricultural produce, and it's expected to bear fruits for more than one period, and also has a remote likelihood of being sold as agricultural produce. What this is saying is, if you have a plant that has the ability to yield fruits over more than one accounting period, that is, if the plant is cultivated today, it takes years to mature and then begin to produce fruits, after which it begins to produce fruit, and such fruits can be harvested, year in, year out for several years. So plants like pawpaw, plants like cocoa tree, if you have more examples, give us. Plants like mango tree, it will take a long time to grow, and then it will yield fruits, and then those fruits will begin to ripen year in, year out. Coconut tree, cashew tree, thank you. Palm tree, exactly. So, but when we have, we plant corn, cocoyam, it is planted now, it is harvested once, and that's the end for the useful life of such a plant. But this particular standard, IS 16, is saying bearer plants that have the capability of producing fruits more than once, and that there's a remote likelihood that it is to be sold as agricultural produce. Such bearer plants should also be classified as part of our property, plant, and equipment, to also be shown as a separate class, just like we had that aircraft overhaul earlier. So it will be shown as a separate class as part of our property, plant, and equipment. The big story here is where such a plant has been cultivated and it has started bearing fruits. IS 16 relates to the plant itself. IS 41 agriculture relates to the produce or meats that are yet to ripen. And then once it is ripened and the fruits are harvested, it falls under IS 2 inventory. So what this is saying is, in one plant, we have IS 16, we have IS 41 agriculture, we also have IS 2 once it is harvested. So plants now qualify as items of property, plant, and equipment. That's just what this is saying. This definition is in paragraph 6. You can look it up. And IS 16 also provides that for how do we account for burial plants? How do we now put value to them? Paragraph 22 says, the cost covering all activities necessary to cultivate the burial plants before it gets to the condition and location necessary for it to be capable to operate in a manner intended by management are capitalized. So all costs, site preparation, seedlings, such costs are all accumulated together. And then once it has gotten to the point where the intention of management is operating in the location and it's also operating in the condition necessary to be capable of operating in a manner intended by management. All such costs are capitalized. Give us more costs. Let's see. Site preparation, seedlings, what else? What else can we capitalize? Mr. Moses Malomo, thanks for joining us. Please, I don't want to speak alone. Let's communicate. Let's communicate. Thank you so much. Edet Chinyere, please. What else? Weeding. Thank you, Mr. Babatunde. Cost of harvest, pesticides, cultivating, and so on and so forth. So all such costs are accumulated together, and they are carried as part of the carrying amount of property, plant, and equipment. Shown as it. Manure, thank you very much, Adekunle. Manure. Clearing of site, Chinyere, thank you for that. Thank you. So all such costs are all accumulated together and capitalized as part of property, plant, and equipment. Fertilizer costs, NECA, EDIT, thank you. Any questions, please drop your questions. The technical team will collate all that and will attend to them at the end of the section. Okay. Next, we'll be looking at one unique exception IS 16 made for setting, land, and building. So IS 16 provides that, this is actually paragraph 29A and B. Trying to move. Screen is not moving. Okay. So we all recall that initial recognition of property, plant, and equipment is either cost model or evaluation model. And for subsequent measurements, we have for cost model, it is cost less accumulated depreciation, less accumulated impairment losses. For evaluation model, it is the revalued amount, less accumulated depreciation, less accumulated impairment losses. We remember, right? IS 16 paragraph 29 now provides an exception for two entities. And those entities are investment companies that provide investment funds with benefit determined by units in the fund. I will explain that. And then the second entity is entities that issue insurance contracts with direct participation futures. These two entities can now account for their owner-occupied properties using the fair value model and recognizing all gains and losses through profit or loss. What this means is that these two entities, where they have land or building they occupy, either for administrative use or for their staff, occupying such a building, such owner-occupied buildings will not be treated as though they are investment property. Investment properties are usually fair valued. So even though they are items of property, plant, and equipment, IS 16 paragraph 29 is saying we should account for such owner-occupied land. These two entities should account for such owner-occupied properties using the fair value model as it exists in IS 40 investment property. So the fair value gains and losses are then recognized through profit or loss. What are these entities? They are insurance companies that offer like a hybrid kind of products, where if, for example, you insure your vehicle, if the risk does not crystallize, your premium, you earn interest on your premium, less any incidental administrative charges or incidental cost to disposal, and then you are paid back like a premium on your premium. You now earn interest on your premium. So they are like hybrids. Not all insurance companies that actually provide such services. And then there are also investment companies. For example, the IBTC fund. We have Discovery Fund. Those two, there are some investment entities that offer investments with benefit determined by units in fund. So they will have like a pool of fund, and then you buy into the fund, and then as an investor, your interest or whatever you earn on such investments is determined by the units you have in that fund. So such entities, these two entities, these are the only exceptions IAS 16 made for this particular provision. So for the first time, the big story here is, for the first time, we now have fair value elements, property, plants, and equipment. So we're now accounting for owner-occupied properties as though they are investment properties. We are fair valuing them, and then all gains and losses are recognized through profit or loss. Are we still together? Mr. Lusheun Malomo, are we still together? Thank you, Obianuju. Thank you. So if this is clear, let me still run through it again. We know that the costs, the initial recognition of property, plant, and equipment is usually cost model and valuation model. There's no fair value model in PPE. But IAS 16 has gone further to create an exception for two entities: investment companies that offer benefits determined by units in funds, and then entities, insurance companies that offer insurance contracts with direct participating features. These two entities, where they have owner-occupied properties, that is, properties which they occupy, either for administrative use or staff quarters, whatever it is. Such, any of these entities can opt to account for their owner-occupied properties using the fair value model, and where the gains and losses are recognized through profit or loss. Mary, thank you. Joshua, thank you. I can see your charts. Okay, so let's look into depreciation. Let's dabble into depreciation a bit. We recall that depreciation is calculated by saying your cost less residual value, less all over your the useful life of that asset. Cost less residual value, and then all over the useful life. The residual value of an asset, if we were to recall, is the value an entity would currently obtain from disposing an asset if that asset were at the date, age and condition expected at its useful life. So residual value is not like the scrap value like we always used to know it in SAS days. It is the amount an entity would currently expect to derive or from the sale of an asset if that asset were at the age and condition expected at the end of its useful life, less any incidental cost to disposal. Let's not forget that. So when we have the cost, we subtract the residual value, we divide by the useful life. That's how we often derive our depreciation. And the useful life is the number of years or the period within which an entity can derive utility from the use of an asset. So basically what this is saying is, this is paragraph 41. Paragraph 41 of IAS 16 is saying, whereas at the end of every accounting year, the residual value and the useful life of an asset shall be reviewed at least once within a financial year. So if you're doing quarterly reporting, where expectations differ from previous estimates, you're expected to review the useful life and the residual value at least once every financial year. And where there are changes, these changes shall be accounted for as change in accounting estimate. So let's look at how expectations may differ from previous estimates. First, I would like to also emphasize here that depreciation is not a policy per se. It should be an estimate. So we should say this depreciation estimate. Because if the standard is saying the residual value and useful life of an asset shall be reviewed. So when we're having a depreciation rate, we should have a range to say it is estimated to be between. But most often in practice, what we see is a policies like cast in stone. The 2% we'll be using for building since like the 70s, still 2%, irrespective of the changes in expectations, the purpose or use of such an asset, it does not really matter. Whatever percentage most organizations use, it's like cast on stone from beginning to the end. And paragraph 41 is saying the residual value and the useful life of such an asset must be reviewed at least once every accounting year. So expectations may differ. If the residual value is the amount we currently expect to derive from disposing an asset, if it were at the age and condition it will be at the end of its useful life. You agree with me that the way the Nigerian economy is right now, it looks like this standard had Nigeria in mind when it was writing it. You discover that the vehicle you bought 10 years ago, if you are to sell it today, you almost still be able to recover the cost of such a vehicle. So at every point in time where expectations begin to change, where the indices begin to change, the economic environment, and all that begins to change, we are expected to review the useful life. So those rates, it could be 2 years this year. Next year, we could look at it and say the useful life of this asset can still take us for another 4 years, and then another 6 years, another 8 years, could even go to 10 years, depending. But most times, there are assets in many organizations that are fully depreciated, but they are still useful to the organization year in, year out. Emmanuel Bello, you're raising your hand. Please drop your questions and we'll attend to them later. Okay. Still under variation of residual life and residual value and useful life, let's quickly look at this example. So if in year 1, the carrying amount is 100 and the residual value is 10, the useful life is 9, depreciation in year 1, 10,000. Do you agree? Tai Adewumi, do you agree? Year 2, we have 90,000 as carrying amount. We have residual value as 9,000, and then the useful life is 10. The depreciation for that year will be 8,100. You can double check when you get the slides later. In fact, talking about slides, I have seen like a number of webinars participants have owned up to the fact that we often collect these slides and never go back to them. If you are guilty, come, enter this chat room, we're together. Because we have in fact, our archives are usually filled with slides from webinars like this, and we don't go back to them. Please, for this particular one, I'm charging us to go back to it. Do carry your calculator, do your checks, go back to the standard, and on your own, try and discover even more. There are a whole lot more that we're here to discover about IAS 16. So by year 3, where the carrying amount is 81,900, the residual value is probably being seen as management may have estimated it to be 0. The useful life as 5. The depreciation will now be 16,380. So we can look through the example later. So, but what this is saying is at every year, the end of every year, the depreciation is expected to vary. If expectations differ, there are situations where expectations may not differ. Let me give us an example. One, we know that in Nigeria, our political office holders, when they are leaving office, they go with their vehicles, they go with a number of things, right? So when a vehicle is purchased for a governor, for example, it is expected that when the governor is leaving, the governor will go with that vehicle. So 4 years will be likely be 4 years. So the estimated useful life will be 4 years. And it will not, except expectations differ, maybe the governor may have been impeached halfway or something. If other conditions happen that could change the useful life of such an asset. But from the beginning, it can just be pegged at 4 years, and that 4 years could be 4 years actually. But if at the end of 4 years, the governor wins again and continues to use, we can extend it to another 4 years. So the useful life should be reviewed at least once in every accounting year. So if they are doing quarterly reporting and the expectations also differ within those quarters, it is okay to use 20% in quarter 1. Then you're looking at 25% quarter 2, that's 4 years, 20%, that's 5 years, you know, and so on and so forth. Jeremiah, thanks for joining us. You're late. You should be finding latecomers, Mr. Chairman. Okay, so let's also look at situations where depreciation will be capitalized. I once, you know, the first time I experienced this, usually when I was an auditor for years, and once I arrive at it, I look at the financials of an entity. I go to the accumulated depreciation. I'm sure I'm not the only one that is guilty of this. I go to the fixed assets schedule. I subtract the opening accumulated depreciation from the closing accumulated depreciation if there are no disposals. I just do a walk back and expect that, okay, the depreciation figure I have there should move and be the same figure I should have in my profit or loss. I'll go and add depreciation in direct costs, depreciation under admin expenses, and I'm not getting it. The first time I saw that thing, I said, accountant, there's an error. Why is your depreciation here not the same? And how did your cash flow balance, you know, and all that? But it opened my eyes to, you know, digging deeper into IAS 16. And it showed that there are situations where depreciation can be capitalized. So even though the accumulated depreciation may have increased to a particular amount, the corresponding debit would be capitalized as part of the cost of another asset. And then the balance could be expensed in profit or loss. So let's not always go with the mindset that, oh, the depreciation in the fixed asset register or the fixed asset schedule must snowball into exactly the figure we have in profit or loss of an asset. So in such a situation, in such a situation, such an asset will be debited, and then accumulated depreciation will be credited. The asset will be debited, accumulated depreciation will be credited. So the asset could be inventory, it could be tractors, whatever it is that such an item of PPE was used for. Depreciation on such an item of PPE can be capitalized and to always or sometimes not always be expensed. So it could also be included in the cost of intangible assets, recognized according to IAS 38, intangible assets. So let's look at an entity that is constructing a building, in the process of constructing building. All costs attributed to caterpillars, for example, used for construction will be capitalized. So if the building is being constructed for a period of 2 years, the depreciation on such caterpillars can be capitalized as part of the cost of the building. So we'll debit cost of the building and we'll credit accumulated depreciation. Afusat, thank you for joining us. Okay. Are we still together? Please let me hear from you in the chat box. Are we still following? Are we getting it? Are we getting it? Are we learning anything new? Are we hearing some things for the first time? How's our mind working right now? Okay, thank you, Cynthia. Thank you. Thank you, Adebayo. Okay, we are together. Okay, thank you, Veronica. Okay. There are also situations where depreciation could be suspended. So let's look at such situations. Where the residual value becomes greater or equal to the carrying amount. So where the residual value of an asset increases to the point where it now becomes equal or greater than the asset's carrying amount, the asset depreciation charge will be 0. For many vehicles, currently in Nigeria, I think it should just be 0, sincerely, because the amount the entity will currently derive from selling that asset, that vehicle, whatever asset it is, if that asset were at the age and condition, that future age and condition, it will be at the end of its useful life. Less any incidental cost. The carrying amount, the residual value will still be either greater or equal to the carrying amount we have currently. So this is a check we should also do when we have a client or we are as accountants in our organization. If the residual value based on estimates, it's usually the residual value is an estimate, it has now got to a point where it is greater or equal to the carrying amount we have on that asset currently. And this also goes to show that the importance of a fixed asset register cannot be overemphasized. There's no way you can do these variations, you can do these permutations, you can do these estimates on just carrying the fixed assets schedule as a bulk, carrying the totals together. You should be able to break them down into each line item, each item of PPE. So if we have 2 Prado Jeeps, for example, and their useful life will be different because their utility to the organization might not be the same. One could be a status car, the other could be a pool car. The status car could just be used once in a week, like every Sunday, or when the boss is going for a wedding. Then the pool car is for school runs, is for going to the bank, is for everything. They are both Prado Jeeps. They're bought at the same amount, but the useful life, of course, the pool car would age faster than the status car. So in such a situation, you must always keep checking and reviewing the residual value and the carrying amount and the useful life at all times. Mr. David, you're just joining us. You're late. You're late. Thank you. Okay. Zero depreciation. Let's look at an example, just like we saw earlier. Where the carrying amount is 100 and the residual value, we said the carrying amount less residual value all over the useful life. The first year depreciation is 10,000. The residual value is still lower than the carrying amount. Year 2, we have 9,000 residual value, still lower than the carrying amount. The useful life is still 10. But by year 3, the residual value is now estimated to be 85,000. And the carrying amount is still 81,000. Useful life has now even been increased to about 15 years. Depreciation at this point will have to be nil. So the residual value is usually a function of management estimates. And such an estimate will definitely be, there's no prescription actually. The standard did not provide specific prescription. But based on economic indices, and situations surrounding such an asset, the residual value could be estimated to be higher than the carrying amount. Sometimes the carrying amount, maybe you fully depreciate, it's even 10. And if you sell these assets, even at the end of its utility to the organization, you see that whatever you still generate will still be higher than this carrying amount. The depreciation at that point should be nil. There are also situations where there will be no depreciation because there's no production. No depreciation, no production. In such a situation, let's look at an example. We all know that usually depreciation only begins when an asset is made available for use, especially when it's in the location and condition expected, intended by management's use. And when depreciation also does not cease when the asset becomes idle. So if the asset is still, in the company's in the company's control and it is not in use, that does not mean it will not be depreciated. When the depreciation can also not begin where the asset is not in the location and condition intended by management. To operate in the manner intended by management, you will still not depreciate. However, there are situations where there's no production, you also not depreciate. In the usage method of depreciation, there are entities that utilize the usage method of depreciation. Here, for example, they could have a photocopy machine, and they will depreciate based on the number of productions. Vehicles sometimes based on kilometer run. In such a situation, when a vehicle is parked, for example, depreciation could be 0 because the depreciation method used is the usage method year in, year out. And then the photocopy machine also, the fact that it photocopied 30 this month, next month it didn't photocopy at all, next month will be 0, year 1 will be. So we need to have a change in mindset to a point where these things are not cast on stone. That calculator will carry and be doing 20% on the cost directly from the face of the fixed asset schedule. It shouldn't add up. In fact, if you start adding up, if you use your calculator and it's giving you exactly the figure where the entire motor vehicles are lumped up in one figure, and you are multiplying it and it's giving you the same figure, we should be able to see, let's see your asset register. How come are you saying this? You know, we should be able to ask the right questions to see. Oh, I think the depreciation for this particular month should have been 0. You know, you sit down with the accountant, or if you are the accountant, you should be able to sit down at the end of your reporting period to say, you know, you question some of those indices to say, no, we cannot use this year, this one this year. You recommend to management that you think that the residual value is this, you know, you make your case. And then when you're also given a financial statement to review, you should also guide you in terms of asking the right questions, so that we don't just have that same mindset we took from SAS and, you know, keep having the same mindset even into IFRS. So I hope that with these few points, whatever we have discussed today will serve as a springboard that will motivate us, that will, you know, awaken a fire in us to be able to inquire more and try to know more into IS 16 and indeed every other standard. There are some unique provisions, unique principles within these standards that, even though it should apply to us in our day-to-day, we are totally ignoring them, we're overlooking them, you know, and that's the beauty of accounting. We should evolve, we should be able to, from time to time, be able to apply those standards to the latter, and we'll be able to stand and defend them wherever we are. Thank you so much. Thank you. If you have questions, we'll meet again later. Thank you.
Thank you, Mrs. Gavon, for that and highly educative, you know, presentation on the common errors, misconceptions, and mistakes. And I think from the engagement in the chat room, it shows the members on the platform, you know, enjoyed your session. Mentioned earlier, we won't be able to take questions now, but we've appreciated or you've gained and learned a lot from Mr. Gavon's session. You can, you know, give a sort of an electronic hand clap for her, you know, to appreciate the time and effort she put in to putting this together to come and enlighten us and make us a better accountant in terms of IS 16's provision. We will now prep for the second presenter in the person of Mr. Fulu Okidari. I will try and make you a co-host, so you should be able to set up your own presentation. Okay. Try and unmute yourself first. Okay. I will try and see if you can share your screen. Okay, you should be able to do that. Yeah, thanks for everyone that, you know, appreciated Mrs. Juliet. Please hold on to your questions while we listen to the second presenter. We're proud to the present presenter coming on board. Is Bao. At least we know the stuff. The Mazars consult expert is coming in to come and you know, dish out to us. Mr. Finyefolu is a seasoned accountant with almost 2 decades experience in internal audit system controls fraud risk assessment, investigation, and third-party compliance and process reengineering. He's currently a director with a consulting practice of Mazars in Nigeria, where he oversees the risk consulting function, technology, digital consulting, management consulting function. Prior to joining Mazars, he was with a electricity distribution PLC, where he to institute the unit, providing the necessary assurance to the executive management regarding IT governance and information security frameworks. He has led team in the information security. He was also a team lead when I think it was with Access Bank, where he carried out a cyber threat modeling. And he started his career with Champs PLC. So he's more or less like a broad-based. He has industry experience, has public sector experience before, embarking on finalizing with the consulting arm of Mazars Consulting. He has facilitated several training courses on internal audits, IT governance, and he has a weekly letter to internal auditors, which is widely read on LinkedIn. I'm sure we'll be able to get him on LinkedIn once this session is over. So over to you now, Mr. Finyefolu, for your presentation on the topic, the auditor and the IT environment. You have 40 minutes starting from now, sir. Okay, you are muted. Let me try and unmute you. Okay, should be able to unmute now.
Please confirm that you can hear me, please.
Yeah, we can hear you now.
Thank you very much. Good morning, everyone. Please confirm that you can see my screen and you can also see me as well. Good morning, everyone. It's such a great opportunity to be here today. I appreciate the Amuwo Odofin District for this opportunity to share with auditors as well as chartered accountants that are on this platform today on the auditor and the IT environment. Over the years, there is this cliche that comes and that says that most accountants or most financial auditors are averse to IT. But I'm happy that a platform like this is actually breaking that jinx of ensuring that even our auditors have that expert knowledge of IT and they themselves can carry out and execute IT audit reviews by themselves, whether they have prior IT knowledge or even other certifications along the IT audit value chain. All right, so for my discussion this morning, we will be going through this table of contents as displayed here, where we will look at the introduction showing the shifting landscape of auditing itself. We will look at the rise of IT, information technology, and the various emerging technologies and their impact on various businesses, and also the function of the auditor in this digital age. And we will also look at why we as auditors, we as chartered accountants, why we need to adapt to these new technologies and be able to audit them as well. We'll also take a deep dive into understanding the IT environment, key components in layman terminologies, and their associated risk, and why you as the auditor, irrespective of where you find yourself, whether as an internal auditor or as an external auditor, why you need to audit these various technologies that are within the IT environment of your organization or the environment where you work. We also talk about data security and privacy concerns. Then we will look at auditing in the IT age, where we will do a comparison of the traditional audit techniques as well as the IT-based, IT-led, technology-led auditing techniques that you as a 21st century digital auditor can leverage on. Then we also talk about some few challenges and considerations. Then we'll focus more on the essential skills that you as the auditor, you need to have to be able to audit that IT environment. And the icing of this is where we'll take a pause and look at how you as the auditor from today's class alone can carry out some specific reviews. I call them general IT controls review that you can do. I will take you through some practical steps that you can use to carry out this audit. So that, for example, if you get to work on Monday, you can, for example, ask for the IT policy and you know exactly what you're checking in that IT policy of your organization. Then we look at the future of auditing and IT and how we as auditors can tap into these emerging technologies, how we can employ them to also use to get our audits, our day-to-day reviews to be more better and to be more efficient. Then we look at some, we open up for question and answers at the end. So let's go right into it. Please confirm that you can see my screen from your end. You can use the chat box and you can also hear me properly. First, the landscape of auditing is actually shifting. Audit historically relied on manual procedures. Oh, getting the bank statement, getting the cash book, reconciling it, take it on the right, reconcile it to the left. Manual, paper-based records were what auditors used to review over the years. And the rise of IT, the rise of technology that is not only enabling the businesses of various organizations these days, but it is also transforming lives, transforming businesses. And I'm asking myself, why do we as the auditor, why do we need to be the last adopter of these technologies in our day-to-day audits that we are carrying out for different organizations? These various technology that organizations rely on is creating different digital blueprints, digital footprints on the internet. Whether e-commerce is enabling businesses for organizations, for customers to be able to buy online, make payments online, ensuring that that infrastructure for payments is protected and secured, ensuring that the confidentiality, integrity, and the availability of that IT infrastructure driving the business is safe and secured, so that no hacker, no cyber risk can crystallize, or the particular IT infrastructure driving the business is taken to ransom, and users or suppliers or vendors, as the case may be, or customers may not be able to use that IT infrastructure. Now, another part, traditional auditing over the years has stated to be inefficient or inadequate when it comes to auditing these technologies. Oh, you want to audit an e-commerce profile of a particular organization. You want to understand the infrastructure that is driving the availability of that e-commerce website 24/7. You want to know the capacity of the servers that is driving it. Do you have that knowledge? How can you, as an auditor, be able to carry this out? These are some of the things we will take a deeper dive into as we go on. Now, IT, the various emerging technologies, which could be cloud computing, Internet of Things, big data, as well as artificial intelligence and blockchain, have considerably made businesses better, has considerably made life easier, has consistently drive businesses and makes life easier, and even they become value drivers, profit centers for different organizations. And these technologies, as I said, offer different benefits. As far as they continue to offer different benefits to businesses, making life seamless, making transaction easier. For example, you want to make a payment right from your app on your phone. You can make that transaction. You can make that transfer. You can buy that recharge card. You can pay for that NEPA bill on these various platforms. And you still have that comfort that your profile will not be hacked. You still have that comfort that nobody is going to hack into your account, or your database is not going to collapse, or hackers are not going to brute force into your network to cause any harm. Here's the reason why we as auditors too, we need to learn these technologies. We need to learn the how these various infrastructures, how they work, And if we don't have the basic understanding, there is no way we will be able to audit it effectively. If we don't collaborate with the IT department to understand what is going on within the IT unit, there is no way we as auditors will be able to be efficient and be able to audit the IT infrastructure that is supporting or that is giving that value to the business. Let's move ahead. Okay, so why should we as auditors, why should we adapt? Why should we embrace these technologies that is supporting the IT, that is supporting the businesses where we function, or that is supporting the financial statement, the technology that is generating the financial statement that we are auditing? That's so that we ourselves, the true and fair view that we want to give that assurance on, we ourselves can say that, oh, the IT generating it is also giving that it has the appropriate confidentiality, the integrity of that financial statement from the application that is generating it. You can give assurance on it, and also the availability of that infrastructure. So as organizations are adapting these various technologies, there are different risks and different vulnerabilities that these various emerging technologies introduces to the business. All of us on this call, definitely we've had, with at least if it has not occurred in our own organization, but we have heard of different instances where organizations are actually hacked, whether from an email where a malicious email is sent, phishing emails where they are sent, or even whale-gating mails that are sent to senior management staff of an organization. For example, the MD's email is spoofed, and is a spoofed email from the MD is sent to the CFO requesting that some particular payments be made urgently, quickly. Those are cyber risks that can crystallize based on these emerging technologies that is being implemented. Then again, if technology continues to drive business, then there must also be the IT audit, the audit of that infrastructure that is driving the business. And our audits, without a review of the technology driving the business, our audits sincerely is incomplete. There is no way you will review a large data sets without some automation, without some data analytics within it. And if you continue to do that manually, it will obviously be prone to errors. It will be more time consuming. And the lack of technology skills that some of us as auditors do not have will not allow us to be able to leverage on appropriate data analytics that can give us better insights and able to identify red flags within data that we want to review to actually give that independent opinion on the statements that we are reviewing. And if we continue to have inefficient audits, then management may not be able to place a lot of reliance on us as a unit that provides value to the organization. It will lead to further increase in costs and possibly also not being able to get to the root cause of some IT attacks within the IT environment where we are doing the business. Obviously, there will also be loss of relevance for the auditors that do not have that strong IT knowledge. But I'm telling you, you can start from somewhere. You can start from the less technical aspect, because some of us think, oh, IT is technical. How do I even understand it? For example, 20 years ago, we were not using emails on our phones the way we are using it now. Majority of us were going to the cyber cafe to have access to our emails. So the way technology is moving, that you can do everything practically from your phone, send that mail, attach that document from your phone right where you are, anywhere on the go, without you having access to your laptop, and you've learned this thing over the years or over a while, the same way we should open up our heart to learning about the technologies that is driving the IT that our business is, that the business in which we play in is actually running with. Let's move ahead. Now, I want to talk about some basic key IT components. And at the back of those key IT components, I will talk about the risk that are associated or the risk that can crystallize in these simple IT key components. Yes, majority of us on this call must have heard of these various IT components before. But we need to remind ourselves, we need to know the reason why we need to audit this aspect of this IT environment. What are the risks? How often can this risk crystallize? And what can we as IT auditor do to ensure that this risk can either be eradicated or reduced to its barest minimum? So the first thing we're going to look at is the networks. The network of your organization. Starting from the network diagram of your organization, showing the various devices on the network. We also talk on the network, we talk about the internet service provider. Which company is providing internet service to your organization? Do you even know the name of this organization? Do you know the service level agreement? Have you read the service level agreement that the ISP has with your organization? How can you, as the auditor, ensure that the service levels that this internet service provider, ISP, has promised your organization, 99.9% uptime. But IT will always tell you, the internet is down. The internet is down. You can't have access to your mails. Is it the ISP or the web server? We need to understand this thing. And how can you, as the organization, help your help the IT department even derive more value from that same ISP that is charging you a whole lot for a subscription on an annual basis? Then you want to look at the various devices on your networks. You want to know where the firewall is sitting. You want to know where the local area network is. You want to know the various devices. Even talking about the firewalls, you want to know the rules on the firewalls so that attackers cannot, attackers with new instances may not be able to break into your network, so that there is no denial of service attacks on your network. There is no unauthorized access because there was a brute force attack on your network before, because the rules on your firewalls were not periodically reviewed by the IT team. How can you ensure? How can you speak to the IT person? Show me the rules on your firewall. When last did you review these rules? What are the timestamps on that firewall, for example? And how can you write your report in such a way that you, even as the auditor, can write it in such a way that executive management that has no knowledge of IT can still derive value when they read your report? Then we talk about databases. Everything on your financial application is going to be stored, stored on a particular database. The very first thing, who has access to this database? Some access could be read only, some could be update, delete, or even store. But who are those people that have this access to this database? And what are the privileges assigned to this different access on this database? And even if there are these accesses on this database, how often are those access reviewed? Because if you do not review your databases promptly, or the rules on your databases, there can be easy data breaches, corruption on your database. And if it's corrupted on the database, if you don't have proper audit trail, it is obvious that a lot of modifications may go without nobody noticing. And for example, if your IT guy now has malicious intention, how will you, as the auditor, be able to track this down? What are the things that you yourself need to review, and what are the controls to put in place so that unauthorized modifications will not occur on the database of the organization? Then we have applications. For example, your core financial applications. We have different examples, from Peachtree to Sage to to Sage, to SAP, depending on the magnitude of transactions. Some organizations even have end-to-end ERPs with different modules or existing and functioning on them. So for you as the auditor, for you as the accountant, that core financial application, how often do you review it? How do users get authorized on those financial applications? Do you have an understanding of the segregation of duties matrix on that application? Are you sure that even the audit trail is enabled on that application? So that if anybody is logging in at an unapproved time or is posting transactions that are not authorized, the audit trail will give you the timestamp, the system details, and the username, even the type of transaction that was either posted or authorized. And you can review such an audit trail and flag such exceptions as well. We also have the operating systems. That is the software that manages the hardware and other resources that are within your environment or within the computer. Now, with these days of cloud computing, every organization is having its resources on the cloud. What are the risks involved in cloud computing? What are the vendor challenges? Oh, I'm using AWS. They are mentioning different kinds of vendors. What is your function as the auditor? You are supposed to review these various agreements with these various service providers. They are supposed to provide to you SOC report of their infrastructure, which you as the auditor can place reliance on from time to time to ensure that the data the data of your organization that is secured, that is on the cloud. Yes, because we know the availability of the cloud 24/7, but how are you sure of the security infrastructure on that infrastructure as a service that is being provided to you as an organization? So you need to look at those vendor risk, those compliance challenges, and data security challenges that can come with your organization storing its information or the entire knowledge base of the organization in the cloud. Yes, everyone is embracing the cloud, but there are risks inherent with this cloud infrastructure or with this cloud environment. And how can we as auditors, how can we understand this risk, and how can we help the organization to mitigate against this risk? Let's move ahead. Talking about data security and privacy concerns. For example, do you know if your organization has a data privacy policy? That is number one. Number two, your organization. A lot of people these days have the email of the organization right there on their phones, right there on their tabs. Those phones were not given to them by the organization. It is their personal devices. Does your organization, for example, does your organization have the right policy in place to ensure that they bring your own devices policy? For example, BYOD. Is that policy existing? Because that is where we have that thin line between the organization's data being used for unauthorized purposes, because it's already on the user's phone. It's already on the staff's phone. What are those policies? You as the auditor, do you know if these policies are existing? Have you ever at any point in time gone through the contents of these policies? It is not just for executive management or the IT department alone to be the one in charge of privacy, to be in charge of data security or privacy concerns. You as the auditor, you also need to be aware of these things. Understanding the access controls that are on the various user profiles and the various systems and devices that is being used by the organization. Even for that user that is using his own personal phones to read office mail or to do office work, that email is for the office. It's a proprietary information of the organization. What are the security mechanisms that have been put in place? Is there proper end-to-end encryption? Because there are different encryption tools that can be onboarded on the phones for organizations that make use of their personal devices to do office work as well. So that if, for example, that particular device, that phone gets missing, the organization's information can be wiped out by just a click of the button by an administrator within the IT department. Then how about security awareness? How about security awareness training across the entire organization? Are you, as the auditor, are you monitoring the instances of the various awareness? Is there any cybersecurity awareness training in your organization? Has any of that been done in the recent past? Yes, it's a new year. It's the high time that you can actually work hand in hand with IT to ensure that some of these things are implemented, and you also must monitor its effectiveness. Let's go ahead. Now, we want to compare the traditional auditing techniques with the IT-based audit techniques that we need to embrace going forward. Previously, we said that most of the various audit reviews were manual reviews using just reviewing paper documents, getting all the invoices, all of them are hard copy, getting all the cash book, getting hard copies of the bank statement, getting the hard copies of the bank reconciliation statement, and doing your tick on this side, your reconciliation oversight on that side, or for example, for line items in your financial statement. Yes, you have done your sampling, but you will still need to get source documents from the organization. But now, with the aid of IT, computer-assisted audit tools has taken over this. So that, because most of these invoices these days are now electronic invoices, a lot of all these transactions are end-to-end on the system. With your computer-aided assisted audit tools, you can do a three-way match right there on the system without you printing anything. You can do your reconciliation online there on the system, and it makes you to be able to cover a better number of samples that is the true representation of your population, especially when you are doing that test of operating effectiveness. Previously, yes, even up till now, majority of, at least to understand the process or to understand that business process that you want to audit, you need to yet read the existing policy, interview the various staffs, or better still, have a walk through end to end with your process owner to ensure that you grasp an understanding of that process that you are auditing. But now, with data analytics tools, with visualization dashboards, perhaps for organizations that are using ERP, end-to-end ERP platform, data analytics tools can be plugged onto that ERP that will help you get your audit done easily and seamlessly. You can analyze more data by just click of a button. You can filter on outliers within a transactions. Data analytics tool can help you identify that. For example, your data analytics tool can help you identify easily transactions that were posted on Saturday and Sunday. You may want to review those particular transactions specifically. Your data analytics tools can also look at specific, let's say, minimum level or a particular amount, transactions above a particular threshold that you want to place focus on because they may be huge transactions. Data analytics tool helps us to do better with those kind of audits. Then a lot of other manual analytical procedures is what continuous monitoring using these new audit tools can help us do seamlessly as auditors. And how does this add value to us? It helps your audits to be faster. Your audits are now not prone to errors, and you can easily turn around the time frame of you carrying your audit out can be a lot reduced. Your from the time you start an engagement to the end of the engagement, because you have utilized data analytics tools and continuous monitoring techniques, it helps your audit to be faster. You can actually complete the various line items you have proposed in your audit plan at the beginning of the year. You can easily and seamlessly carry it out. Okay, so why do we have to leverage on technology for these efficient audits? I've mentioned this time without number. Technology helps us to streamline this audit process and improve our efficiency. Automation helps us to handle all the various repeated tasks and freeing us time, better time for us to focus on the report so that you are so that you can highlight the risk that can crystallize from an exception happening, and you can actually state actionable recommendations for management to implement, and your report can actually be a means of a change in the organization. And then using different collaborative tools with different teams, whether from the IT point of view or even from finance or and other departments within the organizations. These tools, when they are implemented on ERPs, especially for large institutions, help the audit to be faster and to be seamless. So what are the essential skills that you as a 21st century auditor needs to have to be able to carry out these seamless IT audits? Or what are the knowledge? What number one, you need to have that technical acumen, that technical knowledge of your own IT environment as an organization. We get to a little bit more details as we go forward. You need to understand the IT systems. You need to know, okay, what is the name of the operating system we are using in our organization? Does IT, for example, have an inventory of all IT assets, from laptops to servers to databases? Do they have that inventory? You as the auditor, you have a right to request for that IT assets inventory, which we said, oh, this IT, this, for example, this laptop is belonging to Mr. Finifolu Okedari. This particular laptop or this particular server is belonging to the finance department, where everything is listed out like that. Have you seen the network diagram of your organization? You can request for it. How are the various devices placed on this network? So it's not as if you want to go and learn the IT afresh. You just want to understand what is inherent, the technology inherent in your organization. And these are practical examples of things that you can ask, that you can review. You can even request for the IT policy. We get to it in the next slide. Request for the IT policy. Read the IT policy. Just read it to just understand it. We are not talking about, okay, asking questions or what exactly am I reviewing in it or what am I aligning it with. That's the next stage. But just read that IT policy. And you may ask me, what if my organization does not even have an IT policy? What if my organization does not have a network diagram, or they don't have an IT inventory, IT asset inventory? You can sit with the IT person, encourage them to actually document the IT policy. They can get templates online and start populating their own IT asset inventory as well. Then the next thing is that digital literacy. How you can easily use the various analytical tools, software, and applications to also collaborate to make your audits also easier and simpler. Then also, you as the auditor, you need critical thinking and problem-solving skills, especially with the knowledge of the IT environment that you are now having. And that leads me to number 4, which is communication and collaboration with that IT person. Because one thing is fundamental. What you don't understand, there is no way you want to audit it. You don't even understand the IT environment. What exactly do you want to audit? And that is why the very first step is for you to get the IT policy. You are collaborating with the IT department. So yes, prior to now, your collaboration has focused more on finance, accounts, and some other departments. That's your collaboration tool now needs to be more with the IT function as well. Trust me, you don't have to understand or know the IT, understand the IT environment or the IT technology with that subject matter expert skill like the IT operations person or like the head of IT. No. But what I'm saying is that at least the basics, you must know them. The basics, you must understand it first. And how will you do that? It's by collaborating, having consistent sessions with the IT person. After you've read the IT policy, you can sit with them to walk you through some of these various policies. Let's move ahead. Now, if we do not go home with anything today, this particular slide is the most important. Now, the review of general IT controls that are within your IT environment as an organization. And out of the various IT general controls, I have just selected 4 high-level ones that you can relate with easily. Please, I need to have all our attention properly on this slide. The very first one, because this is the most important value you are taking home from my session today. The very first thing that you need to have an understanding of is the governance of the IT environment. And that is where you start with the review. You send them a mail to request for the IT policy and procedures. Obtain them, download it and read it. If it's hard copy, collect the hard copy. Even if it's hard copy, make your own copy. Let them make a copy for you. They can scan it so that you can refer to it from time to time and you're not carrying hard copies around. So the very first thing you want to check in that IT policy and procedure or in that framework is that, does it have the executive management backing? Is it signed by executive management? Is it signed by the managing director? Is it signed by the board of directors? Depending on the level of governance within your own organization. That IT policy, has it been signed by that highest person within the organization? Is there a business continuity plan? Is there a disaster recovery plan? And those 2 plans as well, have they been signed by the highest person within the organization? The next thing that you need to look out for is what we call the control page. Control page that shows you when is the next review date. When was this document created? When was this IT policy created? It was created 31st December 2021. And we are in February 2024. Of course, that policy is due for the next revision. And that is why you need to look at that control page to see the next review date. Because technology is evolving. What are the new things that what are the new technologies that the IT has implemented within your organization? Have they been now documented in that particular policy? The next thing you want to check, after you check the next revision date, the users of this IT policy, the staff members, do they know that the IT policy is even existing? Have they signed the IT policy that they will abide by the content of the IT policy? So that, for example, if anything happened on someone's laptop or they go against a particular, whether a particular directive within your IT policy or within your IT procedure, you cannot sanction them if they have not read the policy, if they have not signed as an individual staff to abide by this policy. And you're asking yourself, how can I do this? Right from onboarding, right from staff induction, when that staff is just new to the organization, when they are issuing the laptop to that staff, that is when the IT policy should also be given to that staff so that the staff can read the policy, understand the policy, and sign it. So that if there's any infraction tomorrow and the laptop is missing and you tell the staff, oh, our policy here says that if your laptop is stolen or your laptop is damaged, you are going to pay for it. The person will not start arguing, because what? It is within the IT policy, and that staff are signed to comply with that. And that is why even before laptops or users are given access to the company's devices, IT needs to have a little short induction, not just a pep talk, like an hour or 2 hours induction on how to make use of the IT infrastructure. Most importantly, leveraging on the policy, ensuring that that staff reads the policy and signs to comply with such a policy. Then you want to check the policies. Is it in alignment with best practices? For example, the content of ISO 27001, that is ISMS, COVID-5, as well as NIST, are our policy within our organization, are they in line with those best practices? Then you want to ask, do we have an IT steering committee in our organization? What is the powers and the authority of this IT steering committee? What is their function? They are supposed to oversee various IT projects. How do you audit them? Get minutes of this IT steering committee, and you know what they are discussing. You know the next thing they are following up on. You know the various IT projects that they are deliberating on. And you as an auditor can actually further ask questions about the status of these various IT projects. You yourself as an auditor can be a consultant on such projects to also advise the organization to ensure that adequate controls are embedded in those IT projects or IT implementations as they go through it. But if you don't know whether an IT steering committee is existing, or you don't even know what to review in the content of the minutes of those IT steering committee, you don't know the powers and the authorities, what is guiding that IT steering committee, there's no way you will carry out that review. That sheds light to IT governance. What is the governance structure around our entire IT environment? Your IT policy says it all. Then let's look at user access reviews. We have different applications. For example, the core financial application, the core HR application, and other critical applications that you have within the organization. How are users created on these applications? How are roles modified on this application? Then, for example, when some staff, when they resign their employment from the organization, how promptly is the access rights for those users, how are they revoked? For example, I as an IT auditor that have reviewed different organizations as an external IT auditor, we've seen different instances where staff members, even in finance department, have exited the organization for 6 months, 1 year, and the profile of that exited staff is still active on the core financial application. And why is this so? Perhaps everybody comes with the excuse from the HR to the IT. IT will say that HR did not notify me that the staff is resigning. Finance too, we say, oh, we did not know we are supposed to tell IT. And we thought when the person signed resignation letter or we have signed the exit form, HR will notify IT and everybody will do the needful. But here is the risk. If that user profile is not promptly revoked, if the access right of that exited staff is not promptly revoked, in an instance or a department where they are sharing passwords, I will get to that shortly, where they are sharing passwords, and one of the staff members in that finance has a malicious intent, they can use the password or the profile of a staff that has resigned, use it to carry out some malicious transaction. Even whether you have maker checker control, the authorizer will just approve. The authorizer may not even check who is posting the transaction, because they claim, oh, we are a family in the finance department, we love ourselves, or it's just 2-3 people, we know what we are doing, nobody needs to review us. But it just requires someone with a malicious intention to actually use a profile of someone that has resigned to execute a transaction. And even if your audit trail is saying it and is catching everything, is it the person that has resigned and joined his organization 6 or 1 year ago that you want to go and arrest or you want to give query to? That transaction or that money is lost.
Hence the reason why minimum 48 hours after the exit date of the person, that profile must be, the profile must be disabled. The access right must be fully revoked and retired. And instances when, for example, staff are promoted or a staff redeployed from finance departments to sales or from operations to marketing, they had a specific access rights before, whether on the core financial application, they had some access rights before they were redeployed. Have we modified that access immediately they got redeployed? Or for example, a staff was promoted and previously his profile was a maker, that is an imputer, and he was promoted to a higher level and is now an authorizer. But you have refused to move his profile from an imputer to that of an authorizer. That means he can still use his old profile as an imputer if he has a malicious intention, says, oh, I've posted something, tell another authorizer, authorize it, and it leads to whether it is fraud or unauthorized transactions. So first, you need to request for the list for the user access list on that application. And one thing that is important is the last login date that is on that list of list of users. You compare that list of users with today's dates and know, okay, this person, you can now from there deduce, oh, this person is on maternity leave. This person has not logged in 5 days. Oh, they say he's not around, he has gone for exams. This person has not logged in 10 days. Oh, obviously he's on leave. But this person has not logged in the last 90 days. He has not logged in the last 120 days. That is a red flag for you as an auditor to see. Then the next thing is the password security settings on that application. Is it in line with best practice requirements? Because in all the various IT policy before, your IT policy has stated that, oh, here in our organization, we use complex password. We use our password must be a minimum of 8 characters, and you must change your password every 60 days. That might have been set in the IT policy. But is that IT policy also properly aligned to the security settings on the core financial application? You may have it on your IT directory where your email resides or your login to the system resides. But on that core financial application, is that same password security settings aligned with that? Then you want to ask this for the segregation of duties matrix, which shows that, oh, I as a teller, for example, or I as an imputer, what are the privileges do I have as an imputer? As an authorizer or as the head of finance, what are the privileges that is assigned to my right as the head of finance? Or, oh, I'm a super administrator with IT. That's in IT department. That means I can do and undo. I can create, I can delete. But that may just be for user access alone. I must not have access to posting of transactions because I'm in IT. When you are onboarding that application, did the vendor go through that for you? Did you as the auditor review those controls to make sure they are operating effectively? These are simple things that when you get to office tomorrow or on Monday, you can request for the list of all users on the application and insist that it must have the last login date so that you can easily compare that with the list of staff that you have collected from HR. Let's move to operational resilience, which is ensuring that if there is any disaster, can the organization easily recover from that disaster? Whether it's a little incident, whether it's a major incident, or even if it's a catastrophe or whatever stuff, how soon can our organization be up and running after maybe, for example, a cyber attack? Or for example, if there is flood in our office, or if we cannot access our core office infrastructure, what are the various mechanisms, disaster recovery and business continuity plans that we have put in place? Yes, yours is to first of all read those policies, the BCP, the DRP, and the incident response plan. Read it. They are independent documents. Read it and have that understanding. And these are the various tests that you can do under that. The first is to review the evidence of periodic backups. They say the policy says under the backup policy, oh, we back up, we do incremental backup on a daily basis. And at the end of the week, we do a comprehensive backup that shows we've done it from Monday to Wednesday, from Monday to Friday. The same happens at the end of the month. The same happens at the end of the year. You can ask them, okay, can I have a look at this backup that you said you have taken? Let me see the evidence on the system. Let me see where you have stored it. Even if it's an online storage, let me see the one of yesterday. Oh, we've not done the one of yesterday. Let me see the one of last week. You can ask them, sit with them and see it. But you have to have an understanding of the backup policy that you have read first. And then you do the work to asking, okay, how do you do the backup? That's the next thing. How do you do the backup? Then give me evidences of the backups that you have done. Then the most important question, that where all IT actually have that weakness, is when they've done the backup, do they periodically test the backup? Because that is one of the major requirements of the disaster recovery policy. We've been doing backup every day, every month. But did you test that backup in an independent site? So that, for example, if you cannot access the office and want to continue operations, have you tested that backups? What is the report of that backup test that you did? The same thing for incident report. When incidents happen, for example, we had a server downtime for about 4 hours. Was there an incident log? Was there an incident report? You need to ask for those incident logs and incident reports. Because if those are not documented and the lesson learned, because why these documentations are important is so that we can have the lesson learned, so that if such happens again, we know what to do, and we know how to actually how to kick off our disaster recovery plan, how to initiate our business continuity plan. Who is supposed to talk to the press? Who is supposed to address all staff? Who is supposed to send a mail that all staff should work from home? Then we have different alternate sites to work from. Do we have a cold site? Do we have a warm site or a hot site? And then the next question I'm asking you as an auditor, when last did your organization did a fire drill? We all know what a fire drill is, right? You don't have to be a 16 high-rise building or a 5-story building before you do a fire drill. At least it must be done twice in a year in the minimum, with the reports being documented. You don't have to say, we don't have HSC department here. Is the work of HSC or is the work of the admin department? But you as an auditor, you can ask, where is your report of your fire drill? If fire happens today, will the fire alarms in the building even sound? Do we know that we are not supposed to use the lift when there is a fire? Is there an awareness session after that fire drill on how to use that fire extinguishers that are hanging around the organization? One major check that you as the auditor can also do, those fire extinguishers, when last were they serviced? Will they even be useful when there is a fire? For example, when there is a fire within the office? Does everybody know what to do? Or when you are doing a fire drill, that's when some people are carrying handbag or carrying laptop while they are leaving the building. What is the total number of minutes for the last person to leave the building? So that when a real fire happens, are we sure lives are not going to be lost in our building? We all say, God forbid. Oh, we also, there is insurance. Then the next thing I want to also talk about is cybersecurity awareness. No matter the antivirus, no matter the firewall that you have put in place, no matter the security mechanism, the tools or the technology that is driving IT to make sure that our confidentiality, integrity, and availability is secured at all times, we, the staff, we, the human beings, are the weakest link. If we mistakenly click on a phishing mail that is sent to our mailbox, it can lead to a virus attack on the entire network just because we've clicked a phishing mail. It may not be a phishing mail. It could just be even all those adverts beside our mailboxes. You just erroneously clicked it. And even if you clicked it, do you know the right thing to do? Do you know who you are to escalate to in IT? Even if IT will quarantine your system from the entire network, but you yourself, you must have the confidence to be able to escalate to IT even when you have done what is wrong. And that is why cybersecurity awareness sessions is very important, at least once in a quarter. IT can drive it, but you must make sure that it is done. You must ask for the evidence of these cybersecurity awareness trainings, whether it's attendance or minutes of the training or notice of those trainings, because that cybersecurity awareness helps the entire operational resilience. Because we as staff, human beings remains the weakest link, irrespective of the infrastructure or architecture that has been put in place by the organization. The last in my review of general IT controls is change management. Do we have a documented change management policy? Don't say, our organization is very small. But when the organization wants to change or want to move from one application to another, we were using Peachtree before, we want to move to Sage. That is a major change. Or, a particular decimal point, we were using 2 decimal points before, we want to change something on the face of the current application that we are making use of. Something in the something not just within the graphical user interface alone, but within the technical backend of that application. Or we want to upgrade our database, we want to upgrade our antivirus. It is also different forms of changes. Do you even know when last whether you are using an operating system or a database that is compliant with best practices? Are you still getting support from the service provider or from the various OEMs that you got those operating systems or databases from? So after you've reviewed the policy, to have that high level understanding, request for a log of all those various changes across the IT environment. For example, we moved from a type of ProLiant server to another server. Is there another type of change? Is there a log that houses all these changes? Was there management approval before we implemented these changes? And for example, in that change from a Peachtree to a Sage that I make as an example, did we carry out a post-implementation review to see how the new application is faring after it has worked for about 2 or 3 months? How are the people, how are the finance department and other stakeholders using the application? Are they faring well with it? Or is even causing more bottlenecks for them than the former application they were using? These are the things that you can check from your change management point of view. At least start with obtaining these various policies. That is the fundamental thing. Go through those policies, have an understanding of those policies, then sit with the IT person and have a walkthrough of that change management procedure. Have a walkthrough of those IT policies, understand them, ask questions, and engage them further. With that, you can now do further reviews of these various IT general controls within your environment. As we wrap up, let's look at the future of auditing, especially when it comes to the use of technology. Emerging technologies, quantum computing, Internet of Things, and you as the auditor, you need to stay abreast, stay informed of these various new technologies. For example, ChatGPT is helping auditors, a lot of auditors, to write better reports. At least you can ask ChatGPT, for example, what are the risks of unauthorized access? What are the recommendations that you can put in place so that unauthorized access can be reduced to its barest minimum? But when you get the information from ChatGPT, you have to fine-tune those things so that it's not a copy and paste scenario here. But this is a simple example of how these various emerging technologies can make your work as an auditor, can make your work smarter, can make you more efficient on the job. And the part of continuous learning. For example, in communities like this, in industry forums like this, where you can gain more knowledge, especially when it comes to IT, We have to join such forums. We have ICAN, and ICAN is doing a lot to ensure that its members have good knowledge of IT as well, and they can give that reasonable assurance on the infrastructure that is driving the IT infrastructure that is driving the business. And I cannot further overemphasize, as I wrap up, collaboration and communication, as well as you being open to this new innovation. You need to collaborate more with the IT person. That IT person needs to be your go-to person, not just the finance person or the head of finance. The IT person too must technically be your friend, because you need to, if you don't understand the infrastructure, you cannot audit it. And you can leverage on a lot of audit programs that are available online, can also guide your audits. You can leverage on these technologies. Get subject matter experts also to assist you wherever you feel that, oh, I'm not sure I have this expert within in-house within my organization. You can get consultants to help you carry out that external, that internal IT audit, even if it is once or twice a year, so that you as the head of audit, you as that finance person can have that assurance that IT is not even imputing some figures without your knowledge, or authorizing transactions on the database without your audit trails. We need to also ensure that the audit trail is capturing what is supposed to capture at the right time. If you do not have that knowledge, go for the training. If you do not have that knowledge, you can employ an internal IT auditor that can further enhance your representation of the reviews of the IT department. You also need to leverage on new audit methodology and new audit tools. You can use different IT audit tools, but the point remains that if you do not know how to audit IT, how do you want to implement a technology to assist you? So you can also talk to consultants, that can assist you in these areas, which will further enhance the reviews that you are carrying out as an IT auditor or as an auditor within your environment. As I wrap up, what are the major lessons that we have learned today? One, technology is driving businesses on a continuous basis. And we as auditors, we must embrace this technology. We must embrace it the way we embrace our management report, our management accounts, and our statement of financial position. We must embrace these new technologies like that. Have that understanding of the technology. Because we all know that what you don't understand, you cannot audit. Then start with the review of the policies. At least they are documented. And if they are not documented, request that they document it. Write a report. Let management be aware. Discuss with the IT person. What are the pain points? What are the challenges that you as the IT person is even facing? That may be the risk that can crystallize in the long run. This little knowledge will be the beginning of you understanding the IT environment where you play, and you can now carry out those few IT general controls review that we have talked about today, from IT governance to user access reviews to operational resilience, and also changes that are implemented within the IT environment. Thank you very much. I want to pause here. I'm also open to questions that might have been on the chat box, as we are now get open to questions, answers as we go to the next phase of this session. Thank you very much.
Okay, thank you very much, Mr. Finyefolu Okedare, for that educative presentation. I'm sure our audience won't get tired of giving you the clap. I've read so many of their comments on the chat box as well, showing how much they've gained from it. And I could see the number of participants have not even dropped from the high that we got to since you came on board. Thanks, and more knowledge, to your laurels. Thank you. We are now in the question and answer session. Keep on appreciating. Let everyone know that the slides as well as the recording of this session will be shared to all registered and participants that attended this session. So you can recap again for whatever that you might have missed, or for those of you that had network challenges, you should be able to run through the recording and learn greatly from what our two presenters have dished out to us today. So we are now in the question and answer session. This is going to run up for, although our time is fast spent, but I allowed the second presenter, to finish his session. That I wouldn't want to break him, considering how important the topic he was speaking. So for any of us that has question, we can accommodate about 5 that cut across the two presenters. Just raise your hand so that at least I can log that down now, and we won't have to probably more or less be repeating. If we have more than 5, I will have to take the first 5 presenters. I will indulge our presenters to please stay on. I'm going to ask you to unmute your mic. Just unmute it and stay on while I allow the participants to ask their questions. So just give me some minutes. Please unmute your mic and stay on. So I don't have to more or less call you to come and unmute your mic again. So I have 6 participants that raised their hands to raise the questions, and that is what we are going to accommodate for this session. For any of you, that we couldn't accommodate, if you have further questions, please just, put it in the chat box or send it to the district via mail, and we will be able to send those questions to our participants, to our presenters. And once we hear from them, this will form part of what we are going to, make available to you while we are sending you the materials for the slides. So Mr. Abubakar Isiak, you can unmute your mic and ask your questions. While the questions are going on as well, I'm going to send out a poll regarding our two presenters. I just want you all to, it's a form of a feedback to the district, so that at least we know the quality of presenters we are bringing to our audience, and just to assess them and give us your feedback regarding their performance and the materials they've shared. Oh, go ahead, Mr. Abubakar, your question. And
yes,
please, when you're asking the question, just tell us your name, your membership number. If you are not from Amuwo districts, avail us of the districts that you are coming from, then ask your questions as succinct as possible.
Good afternoon, sir. I would like to appreciate the presenters for the wonderful presentation. Thank you so much, and also appreciate the district for allowing us to to come in for the workshop and the training. Thank you so much. So my name is Abubakar. My membership number is 52,071. So I'm from Mina district. My question goes to the second presenter. Please, what platform can one join to gain more knowledge about this IT audits? Or what I don't know if you have maybe WhatsApp group or any other platform where one can enhance his or her learning regarding the IT or the IT audit. So that's my question. Thank you so much.
Okay, thank you. Mr. Finyi, can you unmute yourself to attend to the question? Mr. Finyi, I'm asking you to unmute. Can you unmute to attend to the question? Mr. Finyi?
Can you hear me?
Okay, I guess there is a timeline between when I enabled you. Okay, you
Yes,
should.
exactly. That's what is happening. That's what is happening.
Okay, so you are fine now. Go ahead.
Okay. Thank you very much. First, there are different platforms where we can learn at least the fundamentals of IT audit from. So different platforms and different educational institutions. One that I want to recommend as for educational institution is AJ Silicon by our very own revered Halaji Razak Jayola. So it's not just about the CISA lectures. No, I'm not talking about CISA lectures now. They also do periodic IT audit trainings that are hands-on, which we can actually make inquiries from them and go for these lectures. And yes, there are a lot of WhatsApp groups we have that you can learn a lot of these IT audit fundamentals from, and also different network societies on LinkedIn, like CyberSafe, CyberRig, CyberGirls, a lot of them on LinkedIn that we can learn these fundamentals of whether it's GRC or IT audits from. I can drop some of those on the chat box so that we can check them out. They have there are various groups on LinkedIn as well that we can join, and from time to time we can participate in these sessions. Thank you.
Okay, thank you, Mr. Finyi. We will appreciate those links. Drop them in the chat box, and we will curate them as well, which will form part of what we are going to send to our participants when we are sending out the meeting, the seminar materials, and the recording. So at least it form part of the information they can use. Mr. Francis Epiduomo. My apologies if I murdered your name. It's not in my character. You can unmute yourself and ask your question.
Thank you. That's okay. My name is Francis Epiduomo, actually called it well. I'm from Amuwo, membership number 31849. Mine is more of a contribution than question per se. So you talked about IT governance. What I want to say there, but first you talked about people exiting and they're still active on the system. So I think the best way is that before a staff exit, you have to do clearance. So clearance includes that you have to go to IT to clear you. If you have hardware, any hardware has been allocated to you, you have to drop it. So they have to sign off for you. So once they have done that, they already know that you are exiting. So automatically, in fact, part of the things they need to check, if you have a checklist to know that when somebody is exiting, these are things we do. First, you have to block you. Well, not why you resign. I'm talking when it's time for you to exit. When you resign, you are not blocked because you are still in the system. It takes time. Maybe you are resigning within a month. So within that month, you will be active. Your system will still be running. Your user ID will be okay because you're still part of the system. But on the last day where you do your clearance, it has to have a checklist to check. Okay, this one is going. His ID will be withdrawn. Password will be blocked, so no further access we have. So even wherever you are, to not work. Another thing again we do is that password expire within a particular period. So if we say a month or 30 days, once expire, you need to set another password before you can use it. Even though you are within the system, As long as that password is you know, you will never have access to the system. It's part of the things that is done. Also, the HR has a role. Most of the things you do clearance on those areas. So you must go through the HR, you go through the finance. And within the finance, there are different also rules because you would have had the other things. You need to go to production, all those things. You need to clear everywhere that you don't have anything to do, anything outstanding. That's number one. Number two is that the training aspect of it. Yes, it's right. In the finance department, which I belong, most of our training plan includes IT. IT must have a session with us to tell us about the IT system and the rest. Apart from that, HR, most sure we include even the legal department, all departments, we invite them to come and have a talk with us so that we have basic knowledge about all the things they do from time to time. So it helps. So those on the finance department issue, design your training not just for technical aspect of it, you also have to look at other areas of the business. So that's that for that. And then for the system design entirely, I think it's proper for the auditors to be involved right from the beginning, especially when they are adopting it new. So once you are involved in the beginning, you already know, you tell them, work with them. You may not be part of the audit, whether you want to give us an added advantage, add-on service to them, or you charge them for it. But you must part of the design of the system right from the beginning. So I've been sure you know everything from the beginning. You tell them what you want, how they do it, the necessary risk and control, risk identified, controls are required as do it there. I think he dealt with extensively on how these controls can be done, which is very good. I'm very, very happy. A lot of things have been learned there. So we should, as auditors, not just come there and be looking for paper document. We should also train our auditor to be able to use some of the system, ERP. If we are auditing in particular, make sure that you know their ERP. So that when you come,
Okay,
you don't.
Mr. Francis, thanks for your contribution. Just to try and manage our time, since we know we have lots of people who will want to do some other things. Thanks for your contribution. Well noted.
Thank you. Thank you.
So, Mr. Kike Lomo Balogun, you have the floor for your question. Your name, your membership number, the district you represent, and then your question. Please, let's keep it succinct, so at least we make
Definitely,
the best use of the remaining time.
All right,
Thank you.
Yes, good afternoon, everyone. My name is Kikelo Mobalogo. I am not a member of the district, or I just got invited by a member. So straight to my question, Mr. Okedare, when you were talking about data policy, privacy, and governance in your presentation, I also want to ask for organizations that have, for example, if you can receive your emails from home, some organizations require you to have like a device policy and something like that installed on your phone before you can access these things. Now, I want to ask this question in the line of access control or role-based access control. Is it compulsory for maybe every member of staff to have that kind of MFA or authentication kind of thing on their phone, or should we advise this based on the sensitive nature of the roles that they carry out in the organization? For example, if the person has like a higher sense of control in the organization, do we give more authentication to them outside the organization than somebody who is just like a regular person, e.g. a secretary or receptionist? Thank you very much.
All right, thank you very much, Kike Lomo. First things first, each organization needs to have their own bring your own devices policy, BYOD. And still focusing on that role-based access control you talk about, this should not, for example, practically everyone in an organization today, irrespective of your role, you can access your email via phone, office email in specifics now, office email from your phone. So some organizations have done it in such a way that before your phone can be onboarded to the office network, it has to pass through some tests. For example, that MFA must be implemented on it, and we call something mobile device management application must also be implemented on it. It depends on the infrastructure or the tools or technology that the organization is using, so that, and why is that important? So that the organization itself can have control over that email part of your phone. So, for example, some old phones, for example, may not have the biometric or the facial retinal scans. That's why that two-factor authentication at times is required, especially when you are about to open your mailbox. The same thing these days that on WhatsApp, for example, people are now implementing extra security mechanisms on it. So the same thing on the email part, so that when you're about to open your email, you still put maybe you still require the fingerprint or your retina scan, or even all those signs on the phone from the, whether you are typing the digit or you are drawing the line, irrespective of that. That is like a second level authentication that must be implemented as far as you want your, what's it called? As far as you want to read your office email from your phone. That is very compulsory. The organization working with IT should ensure that that is implemented going forward. So it's not just based on your role. Oh, I am a secretary, he's the head of IT, or he's the head of finance. As far as you want to get to read your mails from your phone, send your emails from your phone, that must be the MDM, mobile device management system, must be installed on your phone as well. That is what I recommend. Thank you very much.
Okay, thank you, sir. I hope we've seen the links the presenter has dropped on the chat box as well, for those of us that want to join platform that we can enrich our IT audit on. And for any of us that ask questions for the first presenter, unfortunately, I think she needs to travel. She's currently airbound, but whatever questions you have, we will be able to take and then send to her for her to be able to provide any response. Mr. Ibrahim Ajibade, you can unmute yourself and ask your questions now.
Good afternoon, everyone. And thanks to Amuwo for this opportunity. So my question is actually for the first presenter, but it's quite unfortunate. Fortunately and unfortunately, she's not here. So my question is on the recognizing PPE. So she mentioned in her presentation, like, let's take for instance, we bought an equipment 2 years back for 50 million, and this equipment needs to be overhauled this year. So let's say we are spending 5 million naira to overhaul that equipment this year. But when
Mr. Ajibade?
Yes, sir.
Okay, I think you might need to restart your question, or maybe maybe it was from my end. I didn't hear the commencement of your question. You might want to start over again.
Okay, so my question is for the first presenter. She made mention during her presentation about recognizing PPE. Like, for instance, you bought an item of PPE some years back for like 50 million, less, for instance. So this year you need to do a major repair. So she mentioned that for us to be able to recognize that repair that we're doing this year, we need to recognize the parts of those things that we are replacing this year. So the issue now I'm facing is, how do I know how much to recognize? Why? Because when we bought that item, we bought everything as a whole. We bought a plant for 50 million. Now we are doing an overhaul. I don't know how much is the part we are replacing. I don't know the cost. So how do I get the cost, and what do I need to do?
Okay, your question is noted. Unfortunately, she's no more on the platform. She needs to be, she's airbound as we speak. And that question, if we still have time and we have any other member who has an opinion, we might give them the floor to provide context, pending when our own response comes in. But thanks for the question, it's noted. Mr. Riwa Nadideji, kindly unmute yourself to ask your question.
Yeah, good afternoon.
Good
I really
afternoon.
appreciate Amuwo of District Society. Adedeji Ogeduanola, 55254 Ibadan and District Society. My question also goes to the first discussant on the area of no depreciation. On the assets, is that when there is a excess of revaluation, residual value over the carrying amount of the asset, there will be no revaluation. My question now is, what is the cost of the revaluation, residual value being greater than the carrying amount of the asset? Is it as a result of
Answer the question now.
revaluation alone, or
Evaluation.
there are other factors contributing to that? And if that happens, do we recognize any revaluation surplus, and how do we go about treating that?
Okay, thanks. Like I said, your question is noted. Mrs. Egwavan is not here now. I understand she's airbound. If we still have time and we have any other member that can respond to that, pending when our own response comes in, we'll give them that opportunity. But note that.
Okay. Sorry, I've
Okay.
been trying to mute actually.
Oh, my apologies. I just I saw your name that you are still on. I hope you got the two questions from the earlier from the participants.
I think I remember the first one. The second
Okay.
one.
Do you want the second person to repeat the question so at least you can take them both?
Yes, please. Yes, please. Thank you.
Okay.
Okay.
Mr. Adedeji, can you repeat it now? She's here.
Yes, sir. The question is on no depreciation when the residual value of an asset is greater than the carrying amount of the asset. I want to know what could cause the residual value of an asset to be higher than the carrying amount, and if there is such, do we recognize any revaluation surplus, or what do we do to that? That's the question. Is that clear?
Yes, please. Yes, please. Thank you very much, Adedeji. Okay, let me start with Adedeji's question. Revaluation is a different thing entirely. Recall that the residual value of an asset, one major reason why the residual value of an asset will be greater than the carrying amount. The carrying amount is the cost less depreciation. Agreed? So over time, like our currency is currently suffering right now, over time, the expected amount an entity will currently obtain from disposing such an asset, assuming that asset is at its age and condition expected at the end of its useful life, might become higher because currency may have devalued. Situations around the economy may have caused, like a vehicle you bought 5 years ago, for example, you'd be surprised that if you want to sell that vehicle today, you might definitely be selling it higher than the carrying amount of that vehicle. I don't know whether that is clear, Adedeji. So it has nothing to do with if you, and again, paragraph 36 of IS 16 says, if you want to now move to revaluation, like I said, revaluation is different. If you now want to move to the revaluation model, the entire class of that asset will have to be revalued. So the very reason why only one asset's residual value is now greater or equal to the carrying amount is not enough reason to now revalue the entire class. Do you understand what I'm saying? So revaluation is a different thing. There are reasons why management may decide to adopt the revaluation model, and that's a separate discussion entirely. The first question was from, I've forgotten the name now. He said, where a major repair is done, you must ensure that such repair, one, is a condition for continuing operation, and that such repair will also improve the economic utility of that particular item. Else, it's either you expense if it's just a day-to-day repair and maintenance, but if it is major, you capitalize. And I think you asked how it is treated, something like that. I've forgotten what you said. Major repair. I've forgotten the question. I don't know if you can take it again, sorry.
I think the question was about something that has to be written off.
Okay.
Okay, he's here again. Let me allow him to ask the question. Mr. Ajibade.
Thank you, sir. So I was saying that major repair has to do with replacement of a part of that equipment.
Yes.
But when we bought the equipment, we bought it as a whole. The part was not stated that. The part was not stated that, okay, this part is 4 million or so. We just say this equipment, 50 million, we bought it. So how do I know the cost to be recognized, to recognize this new repair?
The asset was bought newly, and
yes,
you find out a new repair. There's nothing to be recognized. The recognition, okay, like paragraph 14 says, it says if you're unable to determine that particular cost as a standalone, what you do is the current price of that particular replacement can be used as an indication of what the cost was at the time you bought it. So you now, depending on the number of years you have used it, you will now depreciate. So the current cost of carrying out such a major repair can be used as an indication. But you must also ensure that such a cost is a condition for continuing operation, and that the two recognition criteria are met, and that it is not your day-to-day regular repairs and maintenance, else you will need to expense it and not capitalize it.
Okay, thank you, presenter. And I hope Mr. Ajibade got his response there. So the last question that we'll take on the voice question is Mr. Olusegun Okunade. Kindly unmute yourself. Sorry. Mr. Okunade, please unmute yourself.
Yeah, thank you very much, moderator, Mr. Michael Alatishe. My name is Olusegun Okunade, membership number 3806 from Ikeja District Society. Mine is not a question, but a word of appreciation to the host chairman, Amuwo District Society, Mrs. Ruth Oyinbrakemi Igwe FCA, for this wonderful coordination that he has given an open hand to other districts to benefit from. She's changing the dynamics of things. And to our two-paper presenter, I must say that Juliet, you did a very fantastic job. When you talk about IS, IFRS, and all those standards, it's always boring, but the excitement was just there, following through from the beginning to the end. And for Fee, I expect nothing less. And to our moderators, you've done a very good job. I feel we should encourage people that are doing well, doing great things. And I know that Roots, you are raising the bar. I hope the people coming behind will sustain it. Congratulations to Amuwo District Society. Thank you.
Yeah, thank you very much, Mr. Sheson. Most appreciated. Okay, since that didn't come as a question, I will allow Mr. Anthony Wobi to ask the last question. You can unmute yourself, Mr. Anthony Wobi.
Okay, thank you. Good afternoon, my fellow colleagues. My name is Anthony Wobi, membership number 14822, Amuwo Odofin District. I have one question each for the two presenters. Let me start with Mrs. Juliet. On the issue of Biara plant, which is now recognized under PPE. Now, these are plants that are perennial in nature, but in their early stage, while they are growing, they are doing well, producing fine, and we can liken that to appreciation. Now, in looking at depreciation, how will you treat such young plants in their early age? When they have not stopped production, they are still growing, doing well, and they are appreciating. So talking about depreciation of such Biara plants, how do you handle the depreciation of such at that early stage? Then to Mr. Okedare, I just want to ask for advice. I was once an MD of a bank, a microfinance bank, and I had an IT head. Now, this IT head was seen, he was caught crediting his staff account and then loading our overhead with the other leg. But just like my nature, I'm very inquisitive in nature. I always go through the management staff, all the staff, I go through their account. And in the course of running through that IT head account, I noticed there were a lot of credits to his account. And I was wondering, this guy is crediting this guy, where is he getting this money crediting his account and withdrawing intermittently? And I called for the operation man, go and get me these deposit slips, get me these withdrawals. And he went, he couldn't see anything. And the amount have run into 3.5 million. So you begin to wonder, these IT heads, I want your advice. Advise us, what are the critical areas where IT personnel can manipulate, especially from the back office, to break down a company to be of use to us auditors, so that when we go there, we know the areas, critical areas, we can take the IT man up on. Thank you.
Okay, thank you, Mr. Anthony Wobi. Mrs. Juliet, you want to go first?
Yes, let me quickly go first. Okay, Mr. Anthony, IS 16 paragraph 55 says that an item of PPE will be depreciated only when it is in the location and condition necessary for it to operate in a manner intended by management. So at the early stages of a burial plant, where it's still young, we just keep accumulating the cost, and until it is now fully mature to the point of producing fruits, where it is at that point where management really intends it to begin to generate fruits from it. It's at that point that depreciation will start, not at the early stages. So burial plants at the early stages will not be depreciated. Thank you. I hope that answers that, Anthony.
Okay, thanks for that. Mr. Okedari, can you unmute yourself to attend Mr. Anthony Wobi's question?
All right. Thank you, Mr. Anthony. First things first, we need to realize that anyone in IT has super admin privileges on practically all our applications. And so whether we like it or not, the fact remains that audit is not just a detective control. It can also be a a deterrent control. If they know you are coming to review something and you're reviewing periodically, there is more, and they will know that during your reviews, you will review A, B, C, D areas. They may likely not carry out some levels of fraud, quote and unquote. So what are these key areas that you need to review as you have spoken? First is first, any access privilege that IT person has, we need to periodically review it. So whether it's an administrator on the Active Directory, whether it's an administrator on the core financial application, whether it's an administrator on the core banking application, it is very, very necessary that we periodically review such access that that IT person has. Now, aside that, any form of GL that the IT has access to, any form of database that the IT person have access to, needs to be periodically reviewed. And this review, yes, we may not have the capacity to review, let's say, on a monthly basis, but at least on a quarterly basis. And I reference that
if we do not have this subject matter expertise inherent in-house within our organization. Two things that we can do. If we have the budget, we can either employ IT audit experts or IT security specialists to assist us in carrying out this review, or better still, from a point of one, employing that IT auditor and it will be resident in-house as a staff of the organization. And you can also outsource that aspect, getting consultants, people that this is the kind of reviews that they do on a daily basis, that they do, and they can come on board, even if it is twice a year or on a quarterly basis, assist with these various, not just IT general controls review. You can even do in-depth application reviews. Because if, for example, the audit trails have been reviewed periodically, they must have spotted when this IT guy that you made reference to was carrying out that transactions. And for example, if perhaps audit tools, if it's a matured environment that audit tools and you've put some rules on those audit tools, it will flag those outliers, send mails to the control team or the audit team for them to do those reviews when such transactions are actually triggered. But if those knowledge is not resident in-house, we can get consultants to review. And when they know, as I said, audit can be a deterrent control. If you know that they are coming to review my work, I want to do it well. If they are reviewing my work and they flag this issue the first time, they report to the MD, reports to the board, and I'm on, well, from query to suspension, depending on your sanction grid, there is no way that the person will not want to behave well. So, for example, there are different instances where we have been invited to carry out even forensic investigation, forensic IT investigations for organizations where the super administrator, this time around the chief technical officer, has access on the mobile money platform of the organization. And on that particular instance, because it has admin privileges, the CTO now can actually make postings, erase the audit trail because he has access to the GitHub, has access to the mobile money infrastructure, and even the GLs go do some manipulations on it. But now he's been doing that for a while till he started now pilfering from other people's wallets. And when those ones now started getting strange debits, especially after salary payments, they are wondering, I didn't make this transaction, where is this coming from? Until it was finally traced to him. And in that kind of an organization, they've not done any form of audit, even normal operational audit, let alone IT audit, in close to 2 years. And they come with this justification that, oh, it's just a small company, we can do it by ourselves, or better still, we trust ourselves, we've done background check on our staffs before recruitment. If we don't have that subject matter experts within house, we can outsource and get subject matter experts to come and assist us with this. Because if we do not pay it as a salary to the IT auditor in-house or to consultants, the money we are going to lose in the long run will be more than the money we've used to engage consultants or engage an internal IT auditor in-house. Thank you very much. I've also dropped the WhatsApp group link to a technology and advisory WhatsApp group. I've dropped it on the chat box that we can join. It's a technology platform where things about technology, audit, IT audit are discussed from time to time, and you can learn a lot on that platform. Thank you very much.
Yeah, thank you, Mr. Finyi, for that elaborate response. Participants, my apologies, we can't take any more questions. As we speak, we have overrun the scheduled time by 42 minutes, but because the topic of discussions and the materials being shared is quite important, and I saw how engaging it is, that was how we were able to accommodate that excess. But we wouldn't want to, take too much of our people's time. Other questions that can be accommodated, like I mentioned, let's drop it in the chat box. In the email of responses that will be sent to you, you can equally ask the questions as well. The presenters' materials will be sent to us, which contains their contact details. You can reach out to them as well to gain more insights or ask further clarifications. And we will equally send the recording of this session for those of us that wants to listen over again to the discussions and all the questions. So we have now come to the end of the interactive session. I will call on the chairman who will give the district's vote of thanks to our presenter and to our participants as well. Chairman, over to you.
Thank you very much. I hope you can hear me.
Yeah, we can hear you.
Okay. In fact, I'm so happy about today's webinar, and I'm glad about the engagement. The speakers have done well, so I really appreciate you, Mrs. Eguavon and Mr. Okedare. Thank you so much for the outstanding presentations. I want to believe that every one of us have actually benefited maximally from today's webinar and the engaging discussions, also through the questions and answer session. Our participants, thank you so much for being here. If you are not here, obviously the webinar wouldn't have taken place, but thank you so much for taking advantage of the privilege and for your active participation. I really appreciate you. I want to thank my team that actually organized this for us. Those working behind the scene, thank you for everything you have done to ensure that we have a seamless execution of the event. I appreciate you all. And to reflect on the diverse perspectives shared today, let us carry forward the knowledge gained and apply it in our professional endeavors. The success of this webinar is a testament to the strength of our community and our shared commitment to advancing excellence in accounting and audit. In closing, I want to express my deepest appreciation to everyone who has been a part of this webinar, the speakers, the participants, the moderator, the organizers, and even the sponsors. Your collective efforts have made this event a resounding success. So I'm so glad and grateful to each and every one of you. Thank you so much for everything. And I hope to see you in our next webinar. Thank you very much. Over to you, moderator.
Thank you, Chairman, for that eloquent speech. Through the magnanimity of the sponsors and the chairman, everyone on this webinar will get their 5 credit hours, that is allotted. Normally, the webinar is paid, but the district, out of its benevolence, decided to make it available to all at no cost to the participant, but of course to the cost to the district. So you all will be credited with your 5 credit hours, and we hope you would reciprocate that gesture by attending our future paid webinars as well. Now we'll bring the district's technical secretary in the person of Mr. Oluseyi Olanipekun, who has some announcements and future district information for us. Over to you, Mr. Olanipekun.
Yes, thank you, Mr. Moderator, Mr. Latishi, Michael. Again, this is ICAN Amuwo and District Society. We hold our meeting, most often we hold it as an hybrid, online and physical. Physically, we hold our meetings at former Laspotech, which is now Lasus Tech, at Isolo campus. That's where we hold our meetings. You can also visit our website on icanamuwo.org to see more information about the district. If you don't belong to a district yet, the door is open to you. Belonging to a district or district membership, we help you to enjoy networking with colleagues. We give you access to programs, webinars, technical sessions like this. You'll be able to mingle with professionals and then you can earn your MCPD as at when due. So I want us to be on the lookout for the next edition of this webinar, though it might not be free, the next edition, which will usually come up ending of the month. We normally hold our webinars last Saturdays of the month. So we are hoping to have the next one, which will be communicated. Some of us that we have our emails and our contact details through this platform, will be able to get the notice across to us. So let us be on a lookout. And if you are longing to join a district, we also hold technical session in our district every meeting, and that is every month. So you have privilege of attending at least minimum of 10 technical sessions in a year if you join our district. Our door is open, and we will also share information on how to join the district with you in our next communication via email for all the privileged participants today. So I want to thank the organizers and the technical committee that put this together. And I want to appreciate the chairman for our generosity, and the ESCO and the entire district for sponsoring this webinar. We appreciate all our attendees, and we hope to see you next time. Thank you very much.
Okay, thanks, our technical secretary. Mr. Folabi, my apologies, we can't take your question. If you have anything that you need to pass to us, just drop it in the chat box. We will pick it up from there and then take it from there. So officially, this session is over. We are going to close with the national anthem and the ICAN anthem.
Hello? Hello, I can't hear.
Thank you. Thank you.
Thank you. Thank you.
Thank you. Thank
Thank you
you.
so much.
Thank
God
you.
bless you for the time.
Thank you for coming in, everyone.
Thank you.
Thank you.
Thank you. Thanks so much.
Enjoy the
Thanks so
rest of
much.
the evening.
Really enjoyed
Thank
Thanks
it.
so
you. A
We
very
much.
big
are
thanks
grateful.
to Amuwo,
Thank
Domi, and
you.
District
Thank
Society.
you
Oh,
so much.
thank you.
Thank
Thank
you.
you.
Thank
We really
you.
appreciate your
The
the
District
chairman.
Secretary, thank you
We
so much,
appreciate
and
you.
God bless
Thank
you.
you. Chairman, God bless you.
Oh, jẹ́ kí n débẹ̀.
Society. Thank you. Thank you.
Thank you.
Thank you and God bless.
Thank you,
Thank
everyone.
you.
Thank
God
you for
bless
coming.
you.
Thank
Thank
you.
you.
Thank you for coming. See you next time.
Thank you.
You,
Thank you. See you
everybody.
next time by God's grace.
Amen. You
See
are
you.
welcome. Thank you for coming.
Okay, thank you, everyone. See you next time.
Okay. Bye-bye. I love you.
Bye
Bye.
now from ICAN Amuwo and District Society. Enjoy the rest of your day.
Thank you, Mr. Moderator. Thank you so much.
Thank you.
Thank you all. Thank you. Thank you. Yeah, normal
I said slapping this thing. When you remove this thing, let me put it on.
I should move the thing. Thing. Similar. Not working.